I think there's a lot of ways to make money in the investing business, clearly. And there are different ways to skin the cat. At its core, at least I believe, if you're doing fundamental investing, simplicity has to be the core of it all. It has to be you're buying at some very cheap multiple of cash flow. It has to be the management is driving results. It has to be that there's a lot of downside protection. But the question is, how do you get to that point and create it at those prices? Like, how do you get there? And I think the answer is going back to where we started, which is you need to be buying where other people aren't looking. And that's what's so interesting about the area of distress and for time, perhaps spin-offs and post reorgs and other restructuring situations. Dividend recaps perhaps is another example. But that's what's so interesting about those types of areas. So I would say I would encourage people to become experts in these various different buckets. Don't just jump in, but become an expert. Don't lose your value discipline. But to be successful, you need to learn this overlay of each one of these buckets, really understand how it works as a way of creating assets and being able to earn returns which would be unavailable from a risk-reward perspective in the general capital markets. And does that make sense?